Hello everyone, today I'm going to show you how to spot price levels that act like magnets for trades called high volume nodes. I'm Darren, and in this video we'll cover why they are a key tool for traders and investors in identifying where price is likely to move to, consolidate for a while and often reverse, also known as supports and resistances. In the rest of the series we'll discuss how and why to use those areas for risk management, stop losses and take profits in trading strategies. So what are high volume nodes? Well, they are the price ranges where heavy trading volume often takes place, making them major support and resistance zones. Consider these like a battle between supply and demand, that is, sellers versus buyers. And due to this clash, price often stalls, reverses or consolidates in these nodes. You might hear them called volume clusters, liquidity pockets, or value areas in tools like Market Profile. So here is a chart I made earlier on the Bitcoin daily, going back a few years to around 2022. It's got some good examples on it. Now, notice here how price finds its initial support on the drop, and this area becomes like a magnet with price returning. I meant to have my red line below because it's support. Price continues to come back to this area like a magnet, testing again and again. Channel EQ here, which is the center, is often tested. In each time the area is tested, the volume is eaten up, making the high volume node weaker and weaker as it goes along. Eventually this gives way to a breakout or a breakdown. As you can see here, tested, failed as support. Now, when they fail the support, they often flip to resistance. This is when I switch the extremity line back round like this. So I remind myself that it's resistance. And you can see price once again returns and begins to test that as resistance. In this case, quite weak resistance as price swiftly recovers, continues upwards. As it continues, you can see it hitting the next resistance zone here, which is like a magnet already. 3 touches here, 4 touches, 5 touches, and then we get the breakout on the weakening high volume node. Price can break out before 4 touches, but my preferred time to wait to see a breakout is 4 touches in breakout trading, and this is just to reduce the number of fake outs, as the number 4 has a high probability, over 50% of breaking out or down. But we'll get to this later in a later video when I explain the strategies. I just want to briefly touch on the market psychology of these areas. Buyers and sellers battling at these areas create predictable repeating behavioural patterns that we can use as part of trading strategies to make a lot of money. Traders use them for stop losses, entries, take profit and risk management, which we'll also cover later on. And investors, high volume nodes also help investors identify areas where they buy, and they help us identify areas where big investors are coming in with big buys or big sells, guiding our long-term decisions. The goal of traders is to identify what the big money is doing, the market making moves, try to follow along and consistently lock in profits. And that's it. That's what high volume nodes are and what to look out for. In the next video, I'll show you how to identify these areas. So let me know in the comments if you've noticed any high volume nodes yourself. Don't forget to subscribe to catch my newest videos. Thank you.